Finally, I think people are beginning to realize that this was an entirely artificial rebound in the financial markets, not in the real economy, and that the props that were under this monetary expansion and fiscal stimulus are no longer operative.
Well, so here we are, looking at a period of austerity that's going to be imposed, I guess. I'm thinking Greece is our metaphor here, that eventually the markets catch up with you. The Federal Reserve has a lot of power, but it's not omnipotent. So I think in the past you said there are actually two primordial forces, the welfare state and the warfare state, that are really driving the federal spending machine. First, neither of those states, I think, are going to be particularly happy with the type of austerity you're describing. So first, I want to know how you might expect them to react to that austerity. And second, where do we really go for spending cuts here at this juncture, given how much mandatory spending we seem to have that's essentially untouchable?
Yeah, well, those are really good questions, because I think that's why we're seeing the utter paralysis in Washington that manifests itself daily. I hear all the talking heads on financial TV saying, isn't that disgusting? What's wrong with these people? Can't they realize they shouldn't be fiddling while Rome burns and all that? But I think that is a superficial misperception. What is actually happening is that we've allowed the welfare state to grow so large, the warfare state to remain so unnecessarily huge, and the tax rolls to be cut so dramatically that we now have a gap that is so imposing that the politicians can't cope with it. They're paralyzed. Anything they might want to do seems so insignificant relative to the size of the problem that they simply repair to inaction. So therefore, the military-industrial complex is hanging on for dear life and is actually driven through the House Armed Services Committee a budget for 212 that's up by 3% or so from 211. Now, why in the world, with the crisis as dramatic and as clear and as present as we see it now, after having gone through the August debt ceiling crisis and the downgrade, would a Republican Armed Services Committee think you need to raise the defense budget in a world where we have no industrial enemies, where Al-Qaeda is down to 40 people, where the great holy warrior of Al-Qaeda is dead? What are we thinking when they raise the defense budget? But I think it's the military-industrial complex is so dug in, and unfortunately they see defense as a jobs program as opposed to what it really is, an utter and complete economic waste, that no progress is made. And of course the same thing is true on this welfare state side. I heard the White House press office the other day say that unemployment was a great jobs program. Unemployment insurance is a great jobs program. Now, how in the world could someone make that kind of preposterous statement? But it was only in the Keynesian, primitive Keynesian derivative sense that, well, if you send out the checks, people will use it to buy some food at the grocery store, and someone will then work at the checkout counter. That is how that is the problem. Every feature of this is now being seen as a jobs program because the economy is stalled out, and the gaps are so great that it seems as there's no political will or capacity to take on the warfare state when it should be dramatically shrunk and demobilized, and we can talk about that. Or the welfare state starting with Social Security. How can someone not believe that at least the top 5 or 10 million beneficiaries out of 50 ought to be means tested, and if we can't afford to give these people their full check, since nobody earned it anyway, then the check needs to be cut back or eliminated. But there's no capacity really to take on any of those issues, and so the system is falling into paralysis, not because the politicians are totally cowardly or stupid. It's that the system is drifted into such massive gaps that the capacity for democratic consensus and for positive action to slow down the doomsday machine is being lost. And that's what the Keynesians never thought about. They never thought you would reach the end of the balance sheet, that you would reach a crisis point like they're having in Greece or Portugal or Europe generally, or now in the United States. And they never thought about the weaknesses and the imperfections of democracy in terms of its ability to cope and make policy. The whole Keynesian myth, I believe, is based on the erroneous idea that the private sector has its imperfections and its cycle instability, and government needs to step in with compensatory policy and make up for it, without any examination of the state and the capacity of politicians to actually manage fiscal policy according to the Keynesian formula. The answer that we're learning is they can't. That the state has more imperfections, built into the process of democratic action, and that this whole policy we've had for 50 years of managing the business cycle, of macroeconomic policy, the whole project of macroeconomic policy has been a giant error. It's being discredited. It's led us into this public sector debt trap, sovereign debt trap, that the system, the political system, cannot work out of. That's the real danger. That's the real crisis at the moment.
Yeah, I agree. Where I think we had an opportunity to fall off of a small stepladder back in the mid-'80s, early '90s, we've now gotten ourselves 40 feet up an extension ladder. And so I think politicians are rightly scared of how we manage the fall from here. At the same time, I see defending the status quo and business as usual not being terribly, let me say, leader-like positions to take at this juncture of history. So we're talking about political blind spots. I'd like to just talk about one of the larger blind spots that I see quickly, get your take on it. And one of my key tenets is that our monetary system, it's through its essential design of loaning money into existence, and our entire economic and institutional scaffolding, which we've then built around that monetary condition, it all kind of requires endless exponential growth. Not a lot, 2%, 3% a year, mind you, but endless growth nonetheless. And without such growth, the entire system becomes shaky, groans ominously, threatens to collapse, maybe systemically. So when we look at this, a second key tenet of mine is that, look, non-renewable natural resources, they are the headwaters of all economic activity. With resources, you build an economy. Without them, you can't. So at the top of this list has to be petroleum, given its unique role in fostering economic activity. It's the original spring, then, that feeds all the tributaries. Where does peak oil fit into your worldview here, if at all? To us at my site, it's that and competition for other critically depleting natural resources, including maybe land or fish or whatever, that seems to be one of the fundamental issues at hand, and the U.S. current leadership seems either ignorant or intentionally avoidant of this entire topic. Is it on the political radar at all? And if not, why not?
Well, it's on the political radar, but in a very superficial way, and I happen to have the screen on right now, and I'm seeing someone sitting before a congressional committee taking the Fifth Amendment on the guaranteed loans that Solyndra got from the federal government. Now, that is symptomatic of everything that's wrong. We cannot have a state-run solution to a very complex, subtle market problem. I agree that there is something in the nature of peak oil happening, but what I think that's a metaphor. I think that's a metaphor for the fact that a delivered BTU, whether it comes out of a conventional oil well or whether it comes out of the tar sands or whether it comes out of some new, more efficient form of consumption or combustion, the price, the real price of a BTU delivered or consumed is rising. And as the real price rises, I believe the market could keep things balanced, but it would slow down the rate of total output growth as the BTU factor weighs on the mix that goes into economic activity. So I think that is being totally ignored. It is another one of the headwinds or constraints that we're facing, along with the demographic time bomb of this huge generation retiring. And if you look at all of these, there is no reason to expect much economic growth for the next 10 or 20 years, even if you had a healthy monetary and fiscal situation. But given the situation that we've described, and given the massive excess private leverage that was built up in the 30-year debt spree, we have sort of added insult to injury. We have maybe a inevitable question of the rising real cost of the BTU being added to the demographic question, being added to the totally distorted world labor market that the central banks have produced, which is another whole topic. But when you put all those together, the headwinds are truly frightening.
I agree. So I see it. There's a multiple convergence of forces here. And, okay, so if I take the summary of this and I say, listen, if a betting person now decides that the odds favor crisis over willing structural reform, that is, they come to the conclusion that maybe our future is more likely to be shaped by disaster than design, what would your advice be to the concerned American who wants these problems addressed responsibly, and what should they as individuals be doing to mitigate or protect themselves from what you see coming?
Well, the first thing is to protect yourselves, you must get out of the risk asset markets. This whole thing, in my view, is a scam that has been promoted by the day and hour by the talking heads of Wall Street and the so-called economists that they trot out on the financial media constantly, with all kinds of spurious explanations as to why there's a light at the end of the tunnel, that we've solved the problem, that the crisis is over, and that the normal machinery of economic recovery is back in shape. All of that, I think, is a dangerous delusion, and therefore all of the risk assets are dramatically overpriced, from copper futures to the S&P index, and to especially the higher beta names in the stock market. So my point would be it's a dangerous place, both the bond market, we're in the greatest bubble of all times. It's been driven by the Fed's bond buying, which is now coming to the end. So the bond market, the fixed income market, is an extremely dangerous place that should be avoided at all hazards. The stock market and the various derivative markets that relate to it is exceedingly dangerous, and so the best thing to do at the present time is conserve capital. And ultimately, the monetary systems of the world are coming apart. They're falling apart. They're losing their credibility, and therefore gold is becoming the de facto money. We're going to be back to a gold standard one way or another through the back door in only a matter of time, simply because the central banks are dominated by the ritual incantation of dying Keynesian theory. And therefore, I would say that's what someone needs to do to protect themselves. What do you need to do politically? I see not a lot of hope at the present time, because both parties, as I've indicated, are in denial. They have their heads in the sand. They're more or less embracing free lunch economics. And I think until we have a thundering crisis in the bond market that truly puts the fear of God into Washington, we're not going to get any break from the path of drift towards disaster that we're on right now.
That's an excellent summary, and I think we're going to leave it there today. I really enjoyed this interview, and your views mirror a lot of my own. Maybe that's why I enjoyed it so much.
Well, your questions were great, and these matters go right to the heart of what's behind, the moment-to-moment headlines and impulses that seem to drive the markets, but are really not the underlying reality that people need to focus on.